Good morning, good afternoon, good day. Welcome to my live market meeting, 23rd September 2020. I am Sagar Nandi. I used to work in IT. I have retired now, swing trading stocks using the Q systems and techniques. This is my traders forum, sagarnandi.com. My email ID tradingprofitably@gmail.com. YouTube channel Trading Profitably and Twitter handle Sagar Nandi. I regularly share live market and stock analysis on these channels. They are open to the public and you are most welcome to make use of them. Let me check. Are you able to hear me and see my screen? You may let me know using the YouTube live chat panel. I will continue. Disclaimer: I am not an investment advisor. This demonstration is for educational purposes only. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. This is a live session. I have not prepared for it. I will look at the market using the usual Q tools, that is Q Elite running on TradeStation, Q Global, Q Finder running on Metastock. I will use them for technical analysis, charting and scanning. I will use Q Vital for stock fundamental and peer analysis. Q Edge for sector industry rotation analysis, and I sometimes use Q Index for market level index analysis. That was the last slide of my presentation. I'll continue with the live system. If you are following me on my Twitter page or YouTube channel or forum page sagarnandi.com, you know what kind of trades am I taking, bullish trades or bearish trades. Last few days the USA market was not so strong, but if you have watched my trades on the forum, you would know that I booked profit in some of the short trades. I didn't take many new short trades. Instead, I took some long trades. Not that you could not take short trades, but it only says that I didn't take many new short trades. Why? I may explain later, but let me first look at the global market, starting with the Australian market, AXJO index. It was moving inside a range and continuing to be inside the range. Tried to go below this watermark support level, but reversed today, displayed a bullish headwind, possible reversal signal, went up with bullish pressure. However, there is a memory resistance line in daily, also in weekly. These auto smart trend lines work pretty well. Therefore, I am not going to consider buying in Australian market right now. It is continuing to move sideways. Japanese index topics. This is also moving inside the range. In the daily, it has memory support, memory resistance. In the weekly also, it has nearby support and resistance. Range bound, I'll avoid taking any trade in Japanese market right now. Of course, I am only looking at the market level. If you look at the industry level, fundamental level, technical level, you may find short-term trades obviously. But looking at the market, it is range bound. China market CSI index was also range bound. Let's check that out this week. Continuing to be inside the range, both in daily and weekly. India market was in an uptrend. Nifty 50 index, that may be changing. It is not in an uptrend anymore. There was a memory support in the weekly earlier that is broken. Now for several weeks it's neither going up nor going down. In the daily it seems to be toppling over, but it is not in a downtrend yet. If it comes to the memory resistance in daily and drops from there, that may give a low risk shorting opportunity. Now I'll avoid buying or shorting in the Indian market. UK market FTSE index. This was range bound and still range bound. In summary, all the global markets we study were range bound except India. They are remaining range bound. Only Indian market was in an uptrend. That uptrend is not there anymore. It is moving sideways, maybe toppling over. We have to watch and see if it is really toppling over, but it is not in an uptrend anymore. So the global market is either range bound or weakening. What about the USA market? USA market was very strong. For that, let me use Q Elite on TradeStation. I have put the market ETFs using both weekly as well as daily interval here in Radar. For the week, you can see the week is not over yet. Today is Wednesday, pre-market hours. IWM Russell 2000 ETF is already down by minus 2.7%. DIA down by minus 1.3%. SPY down by a small percentage for the week, minus 0.1, and Nasdaq is again the strongest, 2.1% up. If you look at yesterday's performance, again Nasdaq is the best performer. QQQ was up by 1.8%. DIA was the weakest, but that also went up yesterday, up by 0.5%. Therefore, yesterday was an up day. However, the week is still remaining not bullish, you may say. Is it bearish? Let's find out. Let's look at the charts, starting with the S&P 500 using the standard weekly daily at a glance template. This rapid uptrend in the weekly chart is broken now, displayed an indecisive shape candle at the top with a bear release signal, and since then for 3 weeks the weekly backdrop color is bearish magenta. In the daily, it broke below support. There is no memory trend line support now. Nothing nearby. The next memory trend line support is further away, which is also near the white direction line. Price drop, however, on Monday it recovered. It was still a down day. You can see that from the activity bar being in red color, but the shape was bullish. And yesterday it displayed a bullish headwind signal, ended with a bullish shape. This probably can help me explain why I didn't take shorts, or not many shorts at least. Not in recent days. When did I short some of the stocks? I shorted around here or around here. And last few days I shared in the forum, I booked profit in them. I didn't initiate new shorts. Instead, when I saw this day's candle, I was more happy to buy. Yesterday also I could have bought, but yesterday I was less willing to buy because there was a memory resistance nearby. I was willing to buy on Monday. If you look at the IWM chart, Russell 2000 ETF, it came to this white direction line and also this long lower tail candle. On Monday, it recovered from that level. Yesterday, Tuesday, it recovered again from that level. IWM is, of course, one of the weaker market ETFs in the USA market, so I was not going to buy IWM, but looking at even the weakest ETF holding to the white direction line with long lower tail candles, I was willing to buy fundamentally strong stocks, which would also allow me to have very narrow stop buy positions. That's what I did. If you look at DIA, also had a long lower tail candle on Monday. Looking at that, you could buy some stocks on Monday itself, or could buy some on Tuesday also when price came to the lower end. And Nasdaq was the strongest again, displayed a bullish headwind on Monday, and Tuesday price went up. If you look at the weekly backdrop color and the daily traffic light color, none of the ETFs are giving strong buy signals. So this is not a time to buy many stocks. You could take some short-term buy positions in last couple of days, but not a time to buy many stocks because none of the market ETFs are bullish, not in an uptrend if you look at weekly, daily combined. What about the leading stocks? The large cap, mega cap stocks. If you look at the weekly interval, Tesla is down by 4%. All the other leading stocks are up. Amazon up by 5.8% for the week, Apple 4.6%, Netflix 4.5%. Facebook, Google are also up by smaller percentages. The ones that are up by bigger percentages, you can instantly recognize them. Up or down by bigger percentages, you can instantly recognize them by the colors. So leading stocks are mostly up this week. Tesla came down because of the disappointment from the battery day or disappointment from Elon Musk's tweet. Either way, it's down, but not down by big percentage by any means. For the week, it is down by 4%, but you can see yesterday it was down by 5.6%. So really it was down only yesterday. Amazon was a big gainer yesterday. If you look at their charts, Amazon charts, it was oversold. On Monday, it came to the watermark support and went up. Yesterday, it went up further, displayed the bull release signal. Traffic light color also turned bullish. It now regained the yellow direction line. It was already above white direction line. Some people like to buy strong stocks that pull back to yellow white direction line both above both of them and starts to go up again. If you are willing to trade that kind of pullback trade setup, you could take a long position in Amazon yesterday itself after market open. There is no Q long trade setup right now because the weekly backdrop color is bearish. This pattern may be common for multiple stocks. There is a question from Mike. Weekly chart, is that a rolling week? No. In TradeStation, Q Elite as well as Metastock Q Global, on the charts, when we see weekly charts, they are for the current week, not rolling 5 days. I think the question has relation to the 5-day performance that we see in Q, Edge, Vital, etc. These are rolling 5 days. This 5-day performance for sector, industry, stock, advanced decline. These are rolling 5 days, but on the technical charts, it is weekly. That was by design. The higher I went into the market structure, I used longer interval. So when I look at the market, ETFs or indices or futures, I use the weekly interval. For market breadth also, I use the weekly interval. After market level comes the sector industry level. For that I use rolling 5 days, and then the stock level. For that I use daily interval. So weekly interval, then rolling 5 days, then daily interval as I come down from the highest level of market structure to the lowest level. Coming back to the leading stocks, Facebook, this had broken memory support in weekly, however came to the daily memory support and bounced up yesterday. Yesterday had high volume shown by the thick line, not very or extreme high, which would have come as green or cyan dots. Still it is high volume, thick bar, activity bar, and it had support from memory support line. Again, these memory supports work very well. If you kept an eye on the stock, you could buy Facebook right at the time it hit the daily memory support and went up from there. That would be a very profitable and low risk day trade in Facebook. There is no Q buy setup. At the same time, it is too much below the recent high, not a time to short Facebook. Interestingly, there was a bearish headwind near the highest level of Facebook price. Google, many of the stocks will have a similar pattern. Strong pullback and then attempted recovery on Monday, still down day, and Tuesday yesterday. Many of the leading stocks went up, not with very high volume. Let's check Amazon again. Did Amazon have very high volume? No. High volume, but not very high. Now, if you look back, the high volume or rather very high volume down days are there, not very high volume up days. The last very high volume up day was here, end of August. Now we are in end of September. For 1 month, there had not been any very high volume update in Amazon. I think that would be true for the other leading stocks also. Facebook also no recent high volume, very high volume update. Google same. Apple it went up strongly yesterday, and this also had a memory support. Looking at that, you could buy it on Monday itself at it as it regained this level using fine-tune chart, or you could try to buy yesterday again after it came down on intraday chart and went up. No buy setup using Q trade setups. Netflix came to the watermark support and went up. Again, no Q trade setup. Not a place to buy, not a place to short. Tesla, yesterday it went down, but not by really big percentage, you may say. Didn't even go below previous day's low. Ended with an indecisive shape candle. So it did go down yesterday by 5.6%, but looking at the weekly daily, there was not a very big drop. Tesla is known to go up down by bigger percentages. No trade setup here also, because none of the market ETFs or the leading stocks were giving confirmed short signal. I was not willing to short stocks, even though market pulled back a little bit. Rather, I booked profit in some of the short positions that I took, that I shared earlier in the forum before knowing the result as usual, and I bought certain stocks. I will have a look at some of those trades from forum, but let's look at the sector level after the market analysis. Yesterday was an up day. If we look at QH now, yesterday was an up day, but not a roaring up day. Slightly up, you can see about 60% of sectors, industries, stocks were up. Bullish day, but not very bullish day. And yesterday's up move was not enough to change either 2 days performance or 5-day performance. And now it is not weekly, it's rolling 5 days. They are continuing to remain pretty bearish. That was also one reason not to buy many stocks. If we look at longer period, 5-day, all sectors are down. 10-day, only one sector is up, 10 are down. Over 1 month also, only one sector is up, 10 sectors are down. Not a bullish market if you step back a little bit. If the market goes up a little bit and then comes down, that may give low risk shorting opportunity. It may not give low risk buying opportunity immediately, not at least at the market level. However, at individual stock level, you may always find some buy setup, short setup using the top-down analysis or bottom-up analysis using 360 degrees analysis. The sector level is not looking strong. If we look at Finder, let's look at yesterday's Finder, that is bullish. And here the percentages are better than we saw from the sector industry level. In terms of Q signals, 70 to 80% signals, you can say more bullishness you can see from here than from the sector industry level that we saw from Q edge. That is bullish. However, if you again look at the weekly chart for Q Finder, that is again remaining bearish, very bearish in fact. 90% of all signals for the weekly period, week is not complete yet, it's not rolling 5 days, weekly period, that is very bearish. So weekly period is bearish, rolling 5 days is bearish, only yesterday was bullish. May not be the time to buy a lot of stocks. Now let's review some of the latest trades that I shared and see how I manage them. Let me try to find out some of the bearish trades. The first one is about China market. I will review it. I think we can gain some important insight from that, though it is from Chinese market. By the way, the Q systems, the entire sector industry rotation analysis, technical analysis, everything can be applied to global markets. Though many of us trade mostly or primarily in the USA market, they can be used in global markets also. So China post I will review later. Next two were on the long side. The one on the bearish side I shared was on this stock, SPWR. I shared it 9 days ago. Now let's have a look at SPY again. And I may check that exact date, 9 days ago, September 14th. That was when I first shared about SPWR. 14th September. Today is 23rd September. If I look at SPY, okay, let's look at using QLE. 14th September. Here. So I started thinking of shorting in this area, as I mentioned already. I might have shorted some stocks at the top also, not SPY, but some weak fundamental stocks in weak industries. So I shorted SPWR or shared the bearish idea here, and I booked profit when the market dropped. I didn't hold on to it. Let's look at the post. As usual, I shared the 360 degrees analysis when I posted it on 14th September. And that was in the morning session, 9:41 a.m. Eastern Standard Time. And I mentioned that the industry was not weak. It was weak for a few days, but on that day, using real-time sector industry rotation analysis, on that day it was not weak. That was important to know if I was going to short. Pace was telling that at the industry level there was acceleration, not deceleration. So industry was not in favor of shorting. However, this stock was down in spite of 94% of stocks in the peer group, which had 63 stocks. In spite of 94% of stocks being up, this stock was down, and steadily it was coming down. Looking at 10-day, 5-day, 2-day, 1-day real-time percentage, all of them were down, negative numbers. It was overvalued. Earnings growth was also coming down. So fundamentally, for this stock, there were many reasons to consider shorting, though the industry level was strong. Then I looked at the technical charts. In the weekly, it was creating a false upside breakout at the watermark resistance level, displayed some indecisive shape candle at the top, then bearish candle, and then it was showing a bearish candle again, completing the false upside breakout. And at the same time, in the daily, it had a very big gap up move, then an indecisive doji candle at the top, bear release, fell down, tried to go up, then traffic light candle color turned red, bearish, and right on the day I shared the post, flow color also turned bearish. I noted the memory support. It was at price extreme high and reversing. It had a reversal candle some time ago, and also last two pressures were on the bearish side. I guess the bullish pressure was on this gap up day. So it was showing some weakness in the stock. Fundamentally, the stock was weak also, technically also showing weakness. Industry was strong. That was my analysis. It was not a 360 degree straight setup in that way because the industry was not aligned with the idea of shorting. It is of course individual judgment to short or not. Now I followed up with a post on 17th September. See, my original post was 14th September, and what happened to the industry on 17th September after 3 calendar days? Isn't it nice? If I had shorted on 14th September when industry was weak, the industry helped me. Industry became weak. Not only weak, it became the weakest in 3 calendar days. From when I shared the shorting idea when the industry was very strong, even accelerating. So you may see that I could think of shorting a weak fundamental stock when the industry was still going up, but I was correct in this case in my anticipation. The industry weakened very fast, became the worst performer. The stock SunPower continued to go down, and as you can see, now on 17th September, 83% stocks were down in that industry. And the stock dropped further. When I shared it, I think this day, right? This day I marked with the number 3. You can see I shared it initially at 9:41 a.m. Eastern Standard Time. On that day, price recovered and it didn't have a bearish traffic light color anymore. That was followed by a doji candle, and then price closed with bearish traffic light. As of 17th September, it fell heavily. I am in a different time zone, so I already took the short trade using vertical, options vertical, on the day I shared the post. Verticals are limited risk trades, so I held on to it, and in any case it didn't go above the memory resistance. That would be the stop if I was using stocks, but I use verticals, so I was not even concerned about the memory resistance. But it was nice to see the memory resistance held and price fell heavily. I already had significant profit. If it hit the memory support, I would be happier to close my position. That was Sun Power, and after that I followed up yesterday, one day ago, September 23rd. I saw that price came not exactly to the memory support, however it gapped down at the open and then it was starting to recover, and I had reasonable profit in the trade. As I showed from the market ETFs, I was not going to consider taking many shorts. Instead, when I had a profit in this trade, I booked my profit. That was one trade, short trade that I took before the market fell heavily, and I booked profit when the market came down. Didn't wait for that. The stock that I bought, two stocks I bought in recent days that I shared earlier. One is the oncology stock CRDF. It's good to review how I found the stock. This was not found from top-down analysis, not found from traditional bottom-up analysis also. I found it using 360 degrees technique, but I started with fundamental analysis. So I went to Q Vital, where I have my usual universe of stocks, and as you may see, I just create universe based on very high level criteria, because the rest of the criteria I can very quickly figure out using Q systems, either using Q Finder for technical signals or Vital using fundamentals. I don't want to and need to create separate many symbol lists like high growth stock, undervalued stocks, or breaking out stocks. I don't need to create those lists. Of course, you are able to create them, put your own custom symbol lists, many of them 30, 40, but I don't do that. I don't need that because I keep only high level universe of stocks grouped by their price range, mid price, low price, high price. And I have equivalent list of the mid, low, high price of stocks that are there for at least 5 years. Some people want to trade stocks with at least 5 years fundamental history. They may use these three universes. Otherwise, you may use, if you want to trade IPOs or recent IPOs also, as well as long established stocks, you may use the first three categories. You may create these lists using Q Global. So I have put these lists in universe of stocks. Sometimes what I do, I look at their fundamentals first, neither top down nor bottom up. Look at their fundamentals. That is what I did when I found CRDF. CRDF, the oncology stock, was a high growth stock. I am interested only in the last quarter's earning growth because I am doing short-term trading. Average holding period tends to be between 5 to 10 trading days. So I am content with the last quarter's earnings growth. I have ability to look at last quarter, 2 quarter, 3 quarter, or even last 1 year, 2 year, 3 year earnings growth using smart filters. But my first filtering criteria is to look for either undervalued stocks or high growth in the last quarter. And I use the star smart filter for that looks for either undervalued stocks or high growth stocks, and CRDF came to the top. It had a short squeeze potential and it came to the top. By the time I could share it, it went up by 54%, and that was on 17th September. Remember, that was the same day I also saw the market was not very strong at that time, but this stock was strong. I looked at its technical charts. The weekly showed it was at a rock bottom price. It was not going down after that. It was not going up much. If you look at the, okay, this is not weekly. I, in this case, added the monthly chart to show that at some point it was a $900 stock. Now it was less than $8. However, if you zoomed into the weekly interval, you could see it was starting to go up, had uptrend, you may say, higher low, higher high, pulled back. There was a sharp effort to go down on this day, however, ended with a long lower tail and regained the yellow direction line, moved sideways for a few days, and right on the day I found it from Q Vital, it went up sharply with bullish pressure, extreme high volume. By the way, the location of the dot says that by this volume itself it is extreme high, so it was extreme high volume on that day. So I took a position in that stock. That was on 17th September, 6 days ago. Did I see the industry? It was an oncology low price biotech stock, so it was not required probably to look at the industry. If you use fine tune chart, which I didn't, remember I found it from Q Vital, not from technical analysis. But after I found it from Q Vital, best performing strong fundamental stocks, then I saw that it easily broke above the very narrow early range and then went up sharply. If somebody could catch it at the early range breakout point, it was up by 72% by the time price reached day's high. I didn't enter it exactly at early range breakout point. After that it pulled back, but I didn't book my profit on that day also. I was not day trading. I took a position in a strong fundamental oncology stock that was sharply going up. Let's look at the live charts now. CRDF. I bought it somewhere here. I didn't book any profit on that day, not even at the high price point. Instead, I waited for next day. Next day, price went up by about 7-8%, and I booked partial profit on that day. And I moved my stop using Q protection signal. If I apply the Q protection signal using hotkeys, I moved my stop to this level when I booked partial profit. And this stop level defined by Q protection was already above my entry price. Therefore, I was willing to hold on to the remaining position. I do short-term trading, but if I can book profit quickly like I could in this case, I am happy to try to let profit run. After that, price has gone up sharply again. Yesterday again it closed higher, tried to go down but closed higher. The weekly and daily both are looking very bullish, and you can see trailing stop has moved up significantly. So I have moved my stop up. I have already booked partial profit here, and now my remaining positions stop loss is at this level, much above my entry price. I am going to lift my trailing stop if the price continues to go up. So I bought this stock on this day, right? And if you look at the SPY chart again, it was not really bullish. The market was not bullish, but it was oversold. I was looking to buy some stocks and I bought CRDF. I booked profit. The other stock that I bought, and I shared that in the last weekend market roundup. This is a snapshot from the weekend market roundup. I analyzed FLGT. It had a pullback, and then in the weekly chart it was starting to go up. Backdrop color changed to neutral and the shape was very bullish. In the daily, it dropped after the bearish headwind signal came to the memory support, stabilized, and on Friday it went up with a bullish shape candle. So I shared it on Friday based on Friday market close analysis. Let's look at FLGT now. FLGT. Let me change the daily chart template to regular entry chart template. So I shared the analysis based on this day's candle. Next day, Monday, it went up. Tuesday, again, it went up. Though yesterday, it closed with an upper tail candle. It was still up, gap up day, and held on to that gap up move. So yesterday, I had my profit that was more than the risk taken in the trade. So again, here I booked partial profit. I am holding on to partial position. These are the two recent long ideas that I shared in the forum. I booked partial profit in both of them, and some of the recent short ideas that I shared, I booked partial profit or full profit in them as well. Now what to do? The market level is telling that not a time to short, not a time to long, but if I look at the Q edge and start to do top down analysis, let's see which sector was up yesterday. Real estate was one, utilities was one, infotech was also up, industrials, consumer discretionary. If I look at the sector scorecard, sort by 1 day performance, consumer discretionary was strong earlier also. It has been strong for a while. Infotech was also strong, has been strong for a while. On the other hand, real estate, it was weak for a long time. Utilities too. So if I am going to buy into strength, I might consider consumer discretionary, infotech. If I am looking for turnaround sectors, potential turnaround, we never know whether it will actually turn up, but potential turnaround candidates seem to be real estate and utilities. Let's drill down into real estate. Look into the real estate industries first, and I see not all real estate industries are strong. I can sort by 1 day performance. This with cyan color seems to be stronger. For turnaround, I may include healthcare rates also. Let's now drill down into their stocks. If we find a strong fundamental stock that is going up, then that will complete our turnaround candidate search. These are the stocks. Because I am looking for turnaround candidates, instead of trying to find star candidates 3 or 1 star, let me just look for undervalued stocks. And I see not many stocks went up yesterday or even over 2 day period, 5 day, not many are strong. Instead of looking for stocks based on valuation, if I wanted to look for stocks just going up in these industries, I could use this short action button. This is what I did yesterday, and now I see there are several stocks that are up by significant percentage, and you may see that what you think, what I think is one thing, but to find trades we may look at the market stocks from different angles. I tried to look for undervalued stocks. Not many undervalued stocks went up. Why did I look for undervalued stocks? I thought the sector and the industries were down for a while, maybe it is more worth looking for undervalued stocks. But when I actually look at the data, that is not the case. The stocks that went up were not necessarily undervalued. There are several of them medium valued. I am not keen to buy the overvalued stocks, but interestingly, the one that came to the top, unit corp, medium valuation, and it's actually a high growth stock in the last quarter. Also, it pays a very nice dividend, 6.1%, has a short squeeze potential. It was the biggest gainer in all the strong real estate stocks. So this could be a potential buy opportunity. So I looked at unit corp. Let's look at it. It is about to break out. Yesterday it went up, however pulled back and closed just below the memory resistance line. If it continues to go up today, of course we have to accept the fact there is another memory resistance line nearby. Still, I think if it is continuing to go up today, continuing from yesterday's high volume up day, high pressure U-turn up day, it may be a buying opportunity, kind of turnaround candidate. However, this is not a stock that is at the lowest price level, which is also saying that this stock is one of the strongest in the sector or in its industry, because it has found its bottom long time ago. Though the sector and the industries are just now turning around, this stock has found its bottom many months ago. It was in April. Now we are in September, end September, and it is holding on to the both daily yellow and white direction line, weekly yellow line, that is equivalent to, you may say, daily yellow and white direction lines, and is trying to break out. So if I am looking to buy the strongest stock in an industry or sector, which I do, I like to buy the stronger ones, unit corp may be the candidate, recognizing the fact that there is a memory resistance nearby. But if it goes up today, it may be a buying opportunity, and in pre-market hours it is up by 1.1%. So I looked at unit corp yesterday. Let's look at some of the other stocks we found from this top down analysis, the ones that went up by, let's say, at least 2%, and there are still many of them. Let's put them in radar and look at them one by one. AIV, and by the way, now you may read the symbol and the name very easily from the watermark. AIV regained the watermark support in daily. However, it is just below the memory in weekly. If it could go above the memory support in weekly, that could give a strong price hold signal, but not enough signal to buy now. Next one, EPRT. This is at a much better price level. It is already in an uptrend, pulled back just enough to come near the memory support and white direction line. Yellow direction line is also below it. Yesterday had a very bullish shape candle. Weekly so far is having bullish shape. If it continues to go up today, it may give a go with flow buy signal on the daily chart. You can see there was heavy bullish pressure yesterday, U-turn and high volume. This is looking better than AIV. So let me delete AIV. Then NXRT. I may look at only the few with green color in radar. NXRT, here the weekly is yellow, but the daily is red. Weekly has a bearish headwind signal, so I'm not going to consider buying NXRT. Delete that. WY has a memory resistance very close to the price level, and it is in a downtrend in the daily. I'm not going to buy it right now. WY, delete it, and let's just look at one more, FCPT. This is looking relatively better, but still the traffic light color is red, so I'm not going to choose that over ERPT. ERPT seems to be the strongest. Let's look at ERPT's fundamentals in detail now. ERPT. Let me check the symbol again. EPRT. EPRT. My mistake. EPRT.O. No, this one. I can just click the peer analysis button. Then I don't have to worry about typing error. Diversified rates industry. While it is retrieving data for the stock and peers, I may check out its industry. The industry should be strong because I found it from top-down analysis. Turnaround candidate is, that is true. It's a turnaround candidate industry showing acceleration as well as gaining strength. Going back to Q Vital, yesterday was a bullish day. We saw about 60% of sector industry stocks went up, but this industry was clearly stronger. 84% of the 19 peer stocks went up. This stock itself went up by 3.8%, pays a dividend of 4.8%, has a short squeeze potential, medium valuation, negative earnings growth, and decelerating earnings growth. In terms of fundamentals, it is mixed, not the strongest certainly, though in the last yearly period it has robust earnings growth and revenue growth is strong. Still, our primary criteria for Q Technique is valuation and growth. Therefore, in terms of fundamentals, it is mixed. In terms of technicals, it is looking strong. In terms of industry, of course, it is strong. And if I look at the other stock, Unit Corp, that we found to be the best performer yesterday, technicals is not as good as EPRT because it has memory resistance nearby. If I look at Unit Corp's fundamentals, let's check that out. Unit.O fundamentals may be better than EPRT. Specialized rates, let's check out its industry again. It should be strong because I found it from top-down analysis. Yes, it is a possible turnaround candidate showing some acceleration. And if I go back to Q Vital, the industry was very strong yesterday and fundamentally it is stronger than EPRT. Valuation is in the middle. EPRT was also the same, however here it has robust earnings growth. Also has a short squeeze potential, dividend is slightly more than that of EPRT. Therefore, when we look at real estate as a sector, that's how we started. Real estate was up yesterday, but what attracted me to real estate was that it could be a turnaround candidate sector level. Then I looked at the industries, both EPRT and Unit Corps, both of their industries could be turnaround candidates at industry level, and at stock level they are giving possible buy setups, you may say, if you combine fundamentals, technicals. Technically one is better than the other, that is EPRT. Fundamentally Unit Corp is better because Unit Corp was up the most yesterday. If it can continue to go up today, this may give an attractive buying opportunity, same as EPRT. That is how you may see I look ahead. I shorted stocks before others were shorting. I booked profit in them when market fell down. I started buying stocks like the oncology stock or the medical equipment, I think FLGT. Before others were buying, I booked profit in them. And for real estate, I am already looking ahead, trying to find stocks before the sector or the industries become obviously strong. and I am finding stronger fundamental stocks at a technical buy point. That is how I tend to be a little bit ahead of others in buying stocks at a lower price point and also shorting at a higher price point. How are the futures? We may look at ES S&P 500 E-mini futures, ES symbol. I will not look at all the futures, but I showed earlier that all the market futures were at support, and that support is still holding. Some support might have been broken at this level, but there is another memory support in S&P 500 futures ES. It's inside the triangle. If it can break out of the resistance, that will give great buying opportunities. Now let's use the last few minutes to look at the latest post in the forum. That was on the China market, and during daytime I was looking at the market during my daytime, USA night time, and because Q global systems, Q edge, etc. can be used for global markets, I looked at China market. This is for the China market, Q edge, and healthcare instantly stood out as the best performing sector by far using real-time data. Best performing sector by far. Though the overall market was mixed in a way that is worrisome. Why worrisome? Because though I may be able to make profit trading healthcare stocks, it may not say well about the COVID situation. In any case, for trading purpose, I drill down into healthcare stocks. I don't trade in the China market, but I wanted to just look at the market, and healthcare as a sector very nicely was gaining strength, that you could see from QH sector scorecard. Then I went directly to the stocks, and I again looked for either high growth stocks or undervalued stocks, and noticed several of them were up by significant percentage today. Again, using real-time data, I looked at their charts and found at least 7 that were at a buy point. I will not look at the names because they are not known to me. You may read the names from the top if you are trading in the Chinese market, but look at the strength of the sector, the best performing sector by far. Then I found fundamentally strong stocks, either undervalued or high growth, and look at their price pattern. All the stocks, the 7 stocks, not 1 or 2, 7 stocks that I shared, all were going up strongly, pulled back, found support at the memory support level, and started to go up strongly again, often with a bullish flow and high activity. I will go through all of them. This is one, ANKE. This is Fosun Pharma. Same pattern, pullback, gaining momentum again. Again, another one that pulled back to memory support, started to go up. Fourth one, same pattern. Fifth one, same pattern. Sixth, same pattern. Every time the memory support is helping me to identify robust support. And seventh one, and flow color is of course helping me identify the optimal buy point. When 7 stocks in the same sector shows the same pattern, give low risk buy point, I think that is a time to buy. If I was trading in the Chinese market, I was thinking I could buy heavily into all these 7 or at least some of these stocks. It may not be a good idea to overinvest in one sector, not at least for my style of short-term trading, but I could at least buy 3-4 of these stocks today confidently based on the complete 360 degrees analysis on the Chinese market. We are at the 1 hour point. I will end today's session here. My next YouTube live session will be during the weekend, that is the market roundup, again using YouTube live. I look forward to seeing you there. Thank you for joining. Have a good day. Keep safe and trade profitably. Thank you.